Hello and welcome into the KE Report. Chad and Corey here, getting an update from Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And we'll put a link to that down below to Digest Publishing so you can follow along with all the different publications that both Nick and his partner Gerardo have over at Digest Publishing. Nick, always great to get you on the call once a month just to dive into how you're looking at things from the macroeconomic level and what's moving the markets. And then, of course, we'll always dive down into the commodities and the resource stocks. But I guess I'll just throw it over to you broadly, Nick. There's a lot of the same kind of currents that we have in the water that we had in our last discussion last month as far as central banks cutting and loosening. But there are a couple other new things that have flared up, like what's happening in China to the Chinese economy, what's happening, it continues to happen in the U.S. equities kind of broadening out into different sectors. So just like to get your thoughts on what you're seeing on the macro landscape.
I'm just glad we're not talking about the Magnificent Seven every day anymore. We've got a bit more of an interesting market to discuss with sector rotation on and ongoing. Gold continuing to be strong. And of course, we got our rate cut, half a point last month in September, and over a 90% probability of at least a quarter point cut heading into the November Fed meeting here, which, by the way, comes over just 2 days after an election here in the U.S. that is not contentious or close at all. So there's plenty to talk about, in the markets. And last time we were talking about, it was, I think, the morning of the Fed meeting, and everyone had their panties in a bunch about whether or not it was going to be a half a point or a quarter point. And I was saying it really doesn't matter. The takeaway here is, and really the takeaway for 6 months prior to that, is that, the regime was changing. We were now in a lower interest rate environment, and that was going to add more fuel to the fire for precious metals. And that's exactly what happened. Gold has continued to strengthen, and silver is now leading the way in some respects. In the 3 weeks sort of after that Fed rate cut, there was articles and certainly, gold did pull back a little bit. And, that's just a function of how markets operate. I was telling you guys last month that this was the most telegraphed Fed rate cut in history, right? Like everybody knew it. We were buying utilities 5 months before the rate cut came because we knew it was coming in, and we did well with those rate sensitive positions. And so, it's only natural for the market to then, course correct once that news actual comes, right? Sell the news is a saying or an idiom for a reason. And so you did get, an uptick in the dollar from 100 to 103. You did get an uptick in the 2-year and 10-year yields that sent gold closer to 2,600 for a couple of days than 2,700. But the point that I want to get across to your listeners, and what I've been trying to get across to my readers, is that for 5 years or whatever, maybe even longer, it was buy the dip in the tech sector and then those sort of equities. And now that regime has changed, and we're in a rising rate environment, which is now turning around, right? And so the trend now is in gold's favor. These counter trend moves, when gold pulls down to 2,600, those are dips to be bought, whereas we used to buy the dip in the NASDAQ forever. That's now flipped, and you're in a bullish precious metals complex, and you're also in a bullish commodities complex, because lower rates is better for commodities as well. And then you got to look at sort of the economic numbers, the GDP and the inflation. And what I'm seeing is sort of a classic stagflation scenario I've been telling you guys, where I don't see recession anywhere on the horizon, which some folks have started to talk about again. I just see sort of flat 2% growth for the next couple of quarters, and then, inflation ticking back up. And that's really what's going to take these commodities and precious metals to the next level, right? Is the Fed didn't win the inflation battle, right? Just like it missed it, on the upside when they were calling it transitory. They're walking away from the campfire here without putting enough dirt and water on top of it. So yeah, you're going to get a 1 or 2% print on whatever your preferred measure of inflation is, PCE or CPI or whatever. But then as we get here closer to Christmas and into 2025, you're going to see that inflation rate tick back up. And that's one of the things that is, taking the commodities back up. It's one of the reasons that copper is trying to settle in at 430 instead of 4. It's one of the reasons that oil, despite all the supply side things we've heard, Saudi's not going to cut, et cetera, oil still wants to go up and has a 75 handle. And even the softs are starting to go up. And it's funny. It reminds me of when inflation started the first time. We point to different reasons for it. I saw that egg prices are going up, and that has to be because of avian flu. It can't be because of just inflation, right? Or I see palm oil prices up or sunflower oil prices up. And there's always some like justifiable reason for that. It can't just be that inflation is back on the rise. And so I think that's what you'll see. Inflation back on the rise for the next couple of months here. That takes commodity prices and precious metals prices even higher than they are. And I think you'll see traditional rate sensitive industries continue to perform well, which I've been saying, utilities and REITs. And that also puts gold in that basket as a sort of quintessential rate sensitive trade, which is why I think the precious metals continue to be bullish. So maybe a bit of a meandering answer there. I tried to touch on a bunch of macro stuff. Happy to drill down on any of it.
Hey, fair enough though, Nick. It sounds like you're seeing a lot of opportunities out there. And in all fairness, it has been a good market. There's a number of different sectors that you can be in that are performing well. Since we do talk so much commodity focus, you outlined a lot of different factors that can continue to drive commodities higher. What about China's role too? Because they are probably one of the most, if not the most stimulative out there right now with their monetary policy. How much or which commodities in particular do you think that stimulus will help?
Yeah, well, there's a lot of things in China, right? Let me talk about stimulus second, and then let me talk about just the specter of China first, right? I mean, it was only a couple of months ago where they said, we're curbing antimony shipments or exports, we're curbing gallium, we're curbing graphite. Like they're not your friend on the commodity side of things, and we all know they've worked themselves into a monopolistic position in terms of not just production but also processing capacity for some of these more esoteric metals and minerals that we need for our green and artificially intelligent future. So there's that whole aspect of China that continues to do well for commodity markets, including lithium, which maybe we'll get to in a second. And then just on the Chinese economic growth and size front, yeah, they're a huge country, right? Billion people or more, and they can get things done is another thing. They're not a democratic nation, right? That's the ruled by a leader who can make things happen. And so when they say that they can do stimulus, they can actually do it, right? There's no partisans in there that are going to block it. There's no filibusters and there's no debt ceilings, right? They say stimulus and stimulus happens. But I caution, and this is what I've been telling my readers, that, they sort of cried wolf earlier this year, or at least the quote unquote market cried wolf back in the February, March timeline where, China was supposed to be opening up, truly the end of all their COVID restrictions. And that was going to be sort of the catalyst to buy copper. I remember it because I bought copper back in February and March on those very headlines, right? Those China opening headlines. And then what happened is that turned out not to be the case. The Shanghai sort of crashed a couple of months later. And copper went down sharply after it ran to $5. And so you are dealing with the Chinese here, right? And so you've got to really be cautious in terms of, are they going to do the stimulus? Is it going to be as big as they say? And are the numbers truly transparent and not opaque? And so where I left it with my readers is that the village only believed the boy who cried wolf a number of times before they stopped. And so I'd like to see the actual growth that's driving the copper and commodity consumption as opposed to some promised stimulus as my fundamental reason to buy copper. Hopefully that makes sense. Now, that's not to say that copper isn't bullish. That's not to say that I'm not long-term copper on bullish and I don't have a couple of speculative copper positions. What I'm saying is, if I'm going to go back into something like an ICOP or a broad-based copper ETF that owns, Freeport and BHP and Southern, et cetera, then I want to see the growth start to expand and then some real copper shortages start to materialize as opposed to just pointing at the board and saying China's going to stimulate. That's the reason that we're buying copper. Could I be wrong? Yeah, I've been wrong before in my life for sure. But for me, it's that Chinese stimulus headlines aren't just, pushing me headlong into a macro copper trade right now.
Well, let's dig into copper just a little bit more. I think you make a compelling point. I think sometimes we give so much airtime to China because they are such a huge consumer of commodities that people forget there's the whole rest of the planet that still needs copper too, Nick. There's still an electrification theme going on in a lot of countries around the world that don't even have electricity to over 1 billion citizens of the planet, or they have intermittent power. So there's a lot of copper needs there. We hear a lot of narratives about EVs and, the need for more copper to build out charging stations and all the wiring. We hear a lot about it from the AI data centers, and not just the data centers wiring themselves, but also the chips for the semiconductors are very copper intensive, and there's not a good substitution or replacement for it. And then we also hear that even with the renewable push and the green future, as you highlight, that to get more windmills and more solar panels and everything connected to the grid, you still need more copper. So there's a multi-prong approach with copper, but it never seems like it's a right now kind of thing. It's a in the future thing. How do you square that off with investing in copper equities or the ETFs, like you say? Because there's a lot of drivers here, but it's hard to make sense of when they're going to happen and what the timeline is.
Yeah. And so I'll do the song and dance for you. I'll break out how I approach that, right? So I do macro trades. I get in and out of themes, in this case, copper, with ETFs and large cap equities. And I do that based on trends, either the price trends of the commodities themselves, or what I see going on with other macro factors, specifically growth and inflation is what I look at. And then I speculate longer term with smaller companies that I'm always holding and trading around and buying more of, usually via private placements. And so just to not tap dance around and answer, just I'd like to tell you what I'm doing when you ask me questions like this, because it helps me understand why I'm doing what I'm doing better. And hopefully it helps your readers understand the answer to the question that you're sort of getting at. So as it stands right now, I don't own any copper ETFs. Like there's no large cap copper producers in my portfolio, no Rios, et cetera. But I do own like GDXJ, and I do own SLVP, which are precious metals and silver related equity ETFs. And I spend a lot of time looking at ETF holdings. I've told you guys this a lot and often. And when I look at the holdings of those ETFs, GDXJ and SLVP, and then I cross-reference them with some of the other copper ETFs, whether it's the Sprott Copper ETF or ICOP, which is the iShares one, some of those holdings are in there, right? Like Evolution Mining is a top 10 holding, I'm pretty sure, in either the GDXJ or the SLVP, and also in most of the copper ETFs. And so what I'm saying there is I do have copper exposure, even if it's in an ETF that doesn't have copper in the name. So let's be clear about how I get in my subscribers and I view getting exposure to different things. And then the other side of the coin is I have small junior speculative equities, either in various stages of development or exploration on the copper side of things. I own the Aldebarans of the world, the Gladiator Metals of the world, the Kucher Coppers of the world. And I use them not only as barometers, but as, levers or options on the market, right? And I've told you guys this a lot too, like companies like Hannon and Kucho and Aldebaran, I've owned in my portfolio for years, participated in some cases in multiple placements at different prices. And so that begets me a couple of things. It begets me warrants in some cases, so I can, use those positions to trade around copper as I see it. And it begets me the opportunity to see how those different companies trade over time inside of these, mini trends inside an overall commodity supercycle, which I believe we're in. And so tying it back to your question, you say, copper always seems like a next year thing, or it's always bullish, but it's not right now. Yeah, that's like the forest and the trees. I mean, in 2023, copper was $3.25 and it hit $5 last year. So it is moving up and to the right. But then you get these pullbacks, right? Where from the spring or summer of last year, it goes from $5 to $4 in a hurry. And then, human psychology makes you tell yourself that, oh, it's not right now or whatever. No, it's happening and it's ongoing. And those broader movements in the trends are being moved around by those things that I was saying earlier, those macro factors that I watch, the growth, the inflation, the stimulation, et cetera. But the overall trend is, as you were saying, we need a lot more copper over the next 10 years, right? And it's sort of the same as uranium, right? These data centers are going to have to be built. The new power lines are going to have to be laid. These EVs take X amount of more copper than internal combustion engines, et cetera. All that remains true inside of, the Japanese carry trade that had to unwind in the months of June and August in 2024, right? That doesn't change the long-term narrative of copper. And so I give you another long and winding answer there. Hopefully at least 20% of it made some sense.
Oh, I think it did, Nick. And you know what? None of these answers are easy, right? There isn't just a simple, straightforward way to invest in these commodities, especially the individual stocks. That's what makes these smaller sectors difficult, but also can be profitable. Let's also talk about some other sectors. Let's talk lithium. You brought up off mic to us that, look, even the lithium price has perked up a little bit. So much of the focus now in the lithium market, I think, is around this DLE technology. However, it's going to work on whatever type of deposit and brines it's going to work on. And some of these stocks have also perked up a little bit, but it seems like there's a lot of new entrants in the space that have resources that, of course, aren't in production, but everyone says they could be in production in the near term if they find the right DLE partner. How do you filter through all these new lithium companies when the price is moving higher and the market seems a bit more bullish?
I don't. I don't. I own some of them just by nature of how I participate in private placements over time. And so I get access to them. And in some cases, I have exposure to them. Like I own a company called Volt Lithium, which is one of those DLE extraction companies you mentioned. And I own it because sometimes I don't even know why I own it. I think I own it because I did a private placement in a company called Atacama Copper that ended up turning into a DLE lithium extraction company. But no, I don't rack my brain trying to like chase the latest extraction technology. You know, I tried to do that when I was younger, and I learned some valuable lessons in terms of, you know, black box technologies and bench scale and lab scale and pilot scale versus real world. And so I haven't really done any deep dives into the new extraction technologies, and I don't own meaningful stakes in any of those companies, but I do own, you know, traditional hard rock lithium mining and exploration companies that I've told you about over the years. They're starting to get attention again, right? We've had the whole cycle. That's the answer here is commodities are cyclical, and it's hard to see inside, right? When you're, you know, going up, it's hard to know when that, you know, the top of that cycle is going to hit. Everyone knows that, right? No one can buy at the absolute bottom and sell at the absolute top. And if you think back, it was classic bubble stuff in 2021 and in 2022 with lithium, right? The price of carbonate went from $10,000 a pound to 80. Ford and GM and all these global automakers were jumping on the bandwagon, making new announcements, electric F-150, electric Hummer, electric Mustang, Northvolt's building new factories, you know, Fisker and Lordstown and all these videos and the Tesla cult. And then there's just the gains, right? I mean, anything with lithium in the name or that changed their name to lithium was going up, you know, 500 to 1,000%. And then there was literally some 10,000% plus winners, one of which I was a part of called Patriot Battery that went from 16 cents when we first financed it to over $17. But then you get the round trip, right? And we had the complete bursting of that lithium bubble. Fisker went bankrupt, Lordstown went bankrupt, Tesla misses earnings, Ford cancels, you know, the rollout of whatever it is or the expansion of. This is actually funny. I was using AI the other day and I asked them, what were Ford's electric vehicle plans in 2021? And it spit out a list of bullet points. And then I say, how have those plans changed since then? And what are they now in 2024? And, you know, they had canceled like $12 billion investment, delayed the rollout of the electric Mustang, and classic bubble popping stuff, right? And then lo and behold, the price of lithium carbonate goes all the way back down to $10,000 where it was recently. And I'm not saying I called this in real time. It's really tough to see the forest for the trees when you're inside these cycles. But in retrospect, right, Monday morning quarterback, you can see the cycle. It's clear as day on the lithium price chart. And then the bottom stuff starts to come, right? These companies start to go bankrupt. You know, Northvolt, an arm of Northvolt, which was a well-respected, you know, Swedish battery maker, an arm of them went bankrupt the other week. You get canceled plans. And then the big one, which happened in September, was, you know, the China, which we were just talking about, says, you know, we're going to cool off our lepidolite production, which is sort of, you know, cheap production that they were running through in China, specifically the company CATL, which is one of, you know, the larger lithium battery manufacturers in the world. And they're saying they're going to curb their production of this, and then prices start to tick back up. And then all of a sudden, tying it back to what I own, you know, similar to Patriot Battery Metals, we had financed a company early on called Q2 Metals. Originally, they were called Queensland Gold Hills, just to tell you how these industries changes and how the companies themselves change. But they pivoted to lithium in that first boom. and didn't make their discovery, but they got their project, which came from a similar group to where Patriot got their project and is being drilled by the same group, the DeRouge Consulting, right? So they drilled their Cisco asset, which is also in James Bay, Quebec, has a bit better infrastructure and location than Patriot, and they put out something like 200 or 300 meters of just over 1%, spodumene the other week, and shares that had been dead in the water, right? Lithium was left for dead. These shares were bouncing around at 25 cents for a while. They just did a financing this past summer at 25 cents with warrants at 50 that we participated in. And they put out these drill results and shares go to $1.48 in like a week, right? So lithium's not dead. And to your point about the extraction, I see similar things about the recycling. Like there was, some unnamed guy on Twitter coming at me about lithium the other day about how they were going to recycle it all. And it's like, you can't recycle yourself into more, pal. Like that's not how physics and chemistry works. Like you can't take X amount of lithium and recycle into enough to make 2 batteries unless there's huge efficiency gains on the battery side of things, which we haven't seen yet. And so what I'm saying is, these hard rock lithium deposits are still going to play a role in the future of lithium production, even if, and not even if, because we know they're going to take 10 or 15 or 20 years to come online. Like Patriot just put out their initial PEA, not even on the entire deposit, just on some early zones. They put out a PEA. I forget when it was. Time blurs together for me now, but it was a couple of weeks ago. And when it's built, just based on this first PEA, when it's fully built, it'll be the 4th largest hard rock lithium mine in the world. And they still got a lot of exploration to do. So all that to say, commodities are cyclical. You can take round trip tickets. It's tough to know where you are in that cycle when you're in it. But yeah, there's definitely money to be made. And lithium, I don't think, is going anywhere. Yeah, it had a complete cycle. But now, for reasons that I just said, that include both the lithium specific things like Chinese curbing production, but also the reinflation that I was mentioning, that can both be catalysts for lithium to go back up. And to pile on a third one there, if the Chinese stimulus does turn into something meaningful, that was also one of the things that propelled lithium back in 2021, 2022 timeframe, right? Was massive EV buying out of China, right? Chinese families getting incentivized and stimulated to buy, the bid cars, for example, BYD. So it could definitely come back. And judging by what I've seen just on the equities response here in the past couple of weeks, it's not dead. Look, Rio Tinto is currently bidding like $6.7 billion for Arcadium lithium, right? Like they clearly see the value in future lithium production. And just to give you a bit of my credence, I hate pounding my chest, but I feel like sometimes people should tell you why you should listen to them. I've been around lithium for a while, right? Like I was involved in a company in 2017 called Advantage Lithium down in Argentina that Gerardo went to visit. Well, that company got bought out by Orocobre. And so then I was an Orocobre shareholder, and then Orocobre merged with Livent to become Arcadium. And so then I'm an Arcadium shareholder. And here we are. It's been 7 years, and now Arcadium is getting taken out for $6.7 billion by Rio Tinto. And so there's nothing new under the sun. Again, commodities are cyclical and they're going to need a lot more of them. So, just because there was a lithium bust in the past 2 years, doesn't mean there's not going to be a lithium boom in the next 2 years, right? So that's what makes this fun and that's what makes this profitable. And gosh, if I could get another Patriot or two, maybe I'd retire.
Well, Nick, that's a good summary of the lithium sector and really the commodity cycles that we see over and over again. They're repeating patterns. Waves come in and waves go out. And so I really appreciate you breaking down both your outlook on copper and lithium. I think we'll wrap it up there for this episode, but definitely looking forward to how you're looking at things. We'll check back with you in a month or so. And if people want to follow along with Nick and Gerardo's work, again, click on the link below. Takes you over to Digest Publishing. You can follow along with all the offerings they have for investors. And Nick, as always, looking forward to our next conversation.
Me as well, Shad. Thank you.